Ladies and gentlemen, today I want to talk about stocks that may move just like Marvell. So, Marvell is a great company. We talked about it a couple videos ago, and I do think Marvell has more juice in the tank to go. But as of right now, we need to focus on these other names to get this alpha. Those companies are CoreWeave, Nebius, and Nebius and CoreWeave are very similar. They're both these neo cloud businesses that are building out the data centers, and their revenue growth for the next few years is going to be absolutely massive. Starting with Nebius, Nebius is expecting to do $3.44 billion this year in revenue, but next year they are projected to jump to nearly $11 billion in revenue. That's a 219% increase. And the year after that, for 2028, they're expecting to do $20 billion. That gives you 85% revenue growth. Now, Nebius is currently trading at $66 billion in market cap. That gives them roughly a 20 times sales multiple. Now, their net income is negative, and their net income is supposed to go even more negative for 2027. But then in 2028, they're supposed to eke out $1.68 billion in net income. That's with $2.35 billion in operating income. And now that's on the $20 billion revenue. So if they're trading at 20 times sales today, let's bring that down for 2028. Let's say they're trading at 5 times sales. Well, that would give you a $100 billion company. Now, if they're worth $65 billion today, that gives us 53% upside between now and the end of 2028. Now, that may not sound like much, but you have to remember, I gave it a multiple of 5 times sales, and that's when they're supposed to be printing money, as in they're going to have positive net income. So that number could be much higher. If the revenue growth is expected to continue to grow in these 30, 40, 50% numbers for the years following 2028, well, guess what? They might be trading at 15, 20 times still on the revenue. So I could be way below where this company might be for 2028. But I always want to be conservative. So now, with my mind at a 50% growth by the end of 2028, I now want to look at the stock price. Now, if I look at the stock price at $260 for Nebius, and I add 53% to that, that gives us $397 stock by the end of 2028. So now when I look at the option chain, this is where I'm going to make my money. It's not just the 53% stock improvement. I'm looking at the options. I'm looking at the call debit spreads for Nebius. So I'm going to place my call debit spread, not financial advice. This is just personal trades that I may be doing. And I'm going to buy the 370 and I'm going to sell the 380. That's right under that 397 number. This option trade can max out at $1,000. So now let's move on to the second business, which is CoreWeave. CoreWeave does the same thing as Nebius. They're building these data centers. They might be slightly different in the exact products that they're offering, but at the end of the day, they're offering compute for hyperscalers, for businesses, for whoever wants to pay for compute, they're giving it. So looking at the forecast for CoreWeave. CoreWeave is currently already doing $12 billion for 2026. Next year, they're supposed to do close to $25 billion in revenue. That's a 96% growth right there. Then in 2028, they're expected to do $40 billion, nearly $40 billion. That's a 58% growth right there. Now, the thing is with CoreWeave, they are being much more aggressive. What do I mean by that? They are losing money, and they're going to continue losing money even through 2028. So their net income for 2028 is supposed to be negative $2 billion. So what is this doing to the business is it's causing them to trade at a much lower valuation than Nebius. So remember, Nebius is already trading at a 20 times sales for 2026, whereas CoreWeave is trading at only around 5 times sales, doing $12 billion and trading at $66 billion in market cap. But let's say that the financials start improving and the market starts realizing that they're improving, and we get to 2028 and maybe we're trading at a 4 times price to sales At 4 times price to sales in 2028, that puts us at a $157 billion company. Now today, they're only a $65 billion company. So that is a potential triple right there. Maybe I'm being too aggressive with asking them to trade at 4 times revenue, but we're gonna have to wait and see what kind of margins these data centers are creating. And my feeling is that they're going to have very frothy margins, especially for probably until 2030 at least. So a 4 times sales is not a crazy ask for CoreWeave. So now I want to look at the stock. And if the stock is at 119 and with a market cap of 65 billion, if we're expecting them to be at 157 billion, then that would put your market cap at a $287 stock. So nearly a triple. So now I'm going to do the same thing for CoreWeave. I'm going to look at the option chain. I'm going to go out as far as I can, December 2028, and I'm going to look at the call options for 287. But guess what? We can't even see those call options. This number is so high that the option chain isn't even showing it. So what do we do? What we have is the 195-200. So you could buy the 195, not you, but me, and you sell the 200. And right now, this trade is showing to be at 62 cents, so $62 to get into. And this trade would max out at $500 of value. So if you're turning $62 into $500, that's nearly a 10x on your money.